years of pandemic has made us a stronger, better business, which is much more resilient and responsive. Our people, a diversified portfolio, and agile supply chain are key strengths that position us well to deal with any uncertainty. So in summary, you heard me talk about our solid performance in December quarter with double-digit growth, significantly ahead of the market. Our 2-year sales CAGR was a further acceleration versus earlier quarters. EBITDA margin was in a healthy range, and we continue to invest competitively behind our brands whilst maximizing returns. We have further strengthened our market leadership position and have seen now the highest market share gains in more than a decade. In the near term, the operating environment looks challenging, and we expect to see sequentially more inflation in March quarter compared to December quarter. We will continue to manage our business with agility, take all steps required to protect our business model and grow our consumer franchise whilst maintaining our margins in a healthy range. We remain confident and are focused to deliver our 4G growth agenda, growth that is consistent, competitive, profitable, and responsible. With this, I complete my prepared remarks, and we can now take some questions.
Thank you, Ritesh. Vinny, would you like to ask the first question, please? You're on mute, Vinny.
Hi, am I audible now?
Yes.
Thank you so much, Ritesh, as well as Sanjeev sir, for giving me this opportunity. So firstly, I want to talk about the margins. In terms of margins, you mentioned that inflationary pressure will still continue. So will we be taking more price hikes coming forward in the next quarter as well? And because of that, have we seen any downtrading coming in already?
So we, as we have spoken in the earlier quarters as well, our first port of call always is to ensure driving very hard savings across the lines of the P&L, so that we are ensuring that that becomes first port of call, and post that we take calibrated and judicious price increases. Idea always is to ensure that the consumer value equation remains very strong and we're able to grow consumer franchise. So that will remain a clear focus for us. Second, we do expect, to your point, inflation further forming up in March quarter 22. Our strategy will remain same. A, run a business which is extremely competitive and grow our business ahead of market growth, number one. Number two, ensure that while doing that, very clearly, we drive savings very hard across the lines of the P&L, and then we take calibrated price increases to protect our business model. Our aim is to ensure that we maintain our EBITDA margins in a healthy range by doing both of these interventions.
Okay, my next question is actually on the rural demand trends. Now, how have that actually shaped up this time, rural versus urban? There is some bit of a rural slowdown still going on. But after that, what are we expecting going forward? Because coming into the budget plus Rabi season also has been quite good. So, could we see rural growth improve going forward now?
Sanjeev, you want to pick up this question?
Yeah, sure. Rural is a story which we need to pick up and understand from 2019 onwards. In 2019, you would recall towards the end of the calendar year, the rural markets had slowed down. Then we had about 2 years of pandemic. And during this period, especially for the first 7-8 quarters, our rural was pretty resilient. And here we must give credit to the government, because the interventions that were done, whether it is direct transfer of money, whether it was free food grains, whether it was increasing the outlay of Manrega, all that helped to keep the rural markets pretty resilient. Now what the other factor which has come in is unprecedented inflation. This is the kind of inflation we have not seen for many years, and in several commodities. Now what happens is, when you have this kind of inflation, then the consumers, and certainly consumers who are at the bottom half of the pyramid, they titrate their volume because the money is limited, and they would focus on what is the most essential, and that's what they buy. And so from that perspective, clearly we are seeing now a slowdown happening in rural area from a volume perspective as well as from a value perspective.
Okay.
Now, so your second part of your question was, what do you need to do?
Yeah.
Yeah, obviously, This would require putting more money in the hands of consumers. That's the best way to get the consumption going. And that would mean, I would believe that the government, the steps that they took in the last 2 years, many of those steps would have to continue. Yeah, even the Manrega outlay, the government should think about not only continuing, perhaps increasing it. Because at the end of the day, a large section of our population lives in rural area. And it is very important. And many of the FMCG products are basic necessities, right? So that indicates the purchasing power and the inherent strength of the rural economy.
Right.
Mangal, would you like to ask the next question? You're on mute.
Right. Thanks a lot, Mr. Mehta, Ritesh, for allowing me the question. Importantly, it was a resilient quarter. I like the fact you said that discretionary demand is now back to pre-COVID levels. But rural continues to be a bit of a concern. So going forward, what would you think the revenue of the company be? Will it be more volume-led or more price-led, just the way it has been in this quarter, given you your prices?
Yeah, see, typically over a long-term period, for our business, 2/3 growth comes from volume and 1/3 growth comes from price. The situation that we are in for last 4 or 5 quarters now of a very high, unprecedented levels of commodity inflation, during this time, this growth equation has shifted, where we've seen more price compared to volume. And we have seen consumers titrating volume with such high amount of inflation. 2/3 of our business is exposed to very high amount of commodity inflation. So that is what is happening now as we speak in these quarters. Medium to long term, there is no question. Rural has always been very resilient and has always been accretive to FMCG growth. 2/3 of the country lives in rural area, but only 1/3 FMCG consumption comes from rural area. So the headroom for growth from penetration for per capita consumption increase is very strong. So we do believe that in medium to long term, rural should continue to be accretive to overall FMCG business growth and also for HUL. In the quarter, we have done pretty good job in rural as well. And we have gained market share in rural areas as well. Now, the benefit that we have with Hindustan Unilever, our portfolio has straddles across all the price pyramid, be it mass, be it popular, and of course, premium portfolio. So that becomes a very great advantage for us that we have a very comprehensive portfolio to cater to demands at every spectrum of consumer need.
But just to follow up to that, Ritesh, in fact, you said that the next quarter inflation would be much higher than the current quarter as well. And in that, you would maintain your margins in a range. What would that range be? Because it's 25% right now. So at the higher end of the range itself.
Yeah. So as I mentioned, that March quarter 22, we do expect that compared to what we've seen now in December 21, inflation to further firm up. So we will see a sequential step up further in inflation. And there's always a very clear job to be done that the pricing, savings, and that equation has to be very well managed and balanced. We spoke about protecting our business model. Our port of call always is to ensure first drive heavy savings across the P&L, then take calibrated price increases, all in service of ensuring that consumer value equation remains very strong and we keep gaining and growing ahead of market. So competitiveness becomes an extremely important KPI for us, especially in times like this. It has always been, but more so in times like this becomes a very important KPI.
All right. And final question to Mr. Mehta. Then, Mr. Mehta, where are we with regards to the distributor issues that are there in Maharashtra? Have they been settled? And your expectations from the budget?
Yeah, thank you for that question. Yeah, as far as the distributors are concerned, we have got amazing relationship with our distributors. And many of our distributors are third generation distributors. When it comes to distribution, what we focus on in ensuring that our distributors earn the right return on the investment. And that's what we are committed to, and that's what we ensure. Now, we are also very clear that we will have our goods distributed across multiple channels. Because at the end of the day, we have to ensure wherever shopper wants to buy, wherever consumer wants to buy, we have our products available. So I don't see any issues, because we have got great relationship with our distributors. We ensure that they get an ROI, and they also see the kind of partnership which we have, which is based on trust, openness, and transparency.
And your expectations from the budget?
Budget, there are very clear expectations. Like every Indian, we have our expectations. And I think as businessmen and business people, really, the first thing we need is consistency of policy. The second important bit is there are two things which we need to keep an eye on. One is, of course, private consumption, because private consumption is the prime motive behind the Indian economy. And if you look at it over the last year or so, we are seeing the share of private consumption. And that's a very important point, yeah. And the other important bit is the virtuous spiral. The virtuous spiral happens when you have demand, which very clearly results in more capacity utilization, more capacity investment, which in turn creates more employment. And then you have the virtuous spiral going. More money in the hands of consumers, more consumption. So that's what we are seeking. And during the period when the private consumption and the capital expenditure remains a bit tepid, government expenditure will have to play a big role. And government expenditure in areas, investments like infrastructure, has a multiplier effect. And when you have that kind of effect going, slowly and steadily, I'm absolutely certain, not only private consumption will pick up, but very importantly, even the investment will pick up.
Varun, would you like to ask the next question?
Yes. Hello, Mr. Mehta, and hello, Mr. Tiwari. I just wanted to understand, last time when I spoke, when you were speaking at the time of results, you told that premiumization is picking up at the urban areas. So what's the trend now? Is the trend still continuing? And along with this, you have highlighted that many of the new products that the company has launched. So what would be the launch pipeline this quarter? And also, there is one product that plant-based meat market, which is picking up in India, though in nascent state. Unilever globally has a presence in this. Does HUL also has presence in India?
Yeah, so
you go ahead.
Yeah, so let me pick up the first two questions, then I'll hand over to you with the third question. So on the premium portfolio, Varun, this quarter we have seen our premium portfolio again growing ahead of the total average growth of the business. So we are seeing that the premium portfolio of ours, be it hair care, be it skin care, be it skin cleansing soaps, we are seeing continuous traction to that portfolio of ours. These brands are very strong and they're doing business ahead of the average growth of HUL. So that's on the premium portfolio. Second, in terms of new launches, you have seen, I broadly articulated, we had innovation across the board on all of our divisions, be it beauty and personal care, where I spoke about Sensitive Mineral Active by Pepsodent toothpaste, where I spoke about what we did with our digital first brand, which is Simple, where we launched no perfume serums. You also saw us talking about our innovation across other divisions as well. So it has been a quarter with very good amount of innovation. But equally, our innovations that we launched in the previous quarter, if I just name a couple of them, we launched mayonnaise, we launched peanut butter under Kisan. Even those innovations are doing very good. So we are seeing good traction on innovations which we launched in the previous quarter, and we have further launched new benefits for consumers across our three divisions. Sanjeev, over to you for the third question on plant-based meat.
Yeah, that is a big trend in many parts of the world. And at an appropriate time, we will definitely look at bringing into India. But right now, if you look at, we have a wonderful foods and refreshment portfolio. In the last 2 years, we brought in mayonnaise, we brought in peanut butter, and very importantly is health food drinks or Horlicks and Boost. Those are the brands where we have had series of innovations in the plus range especially. And our entire task today is to grow the markets, what we call as market development. And we have a very healthy pipeline, but you will appreciate, Varun, that innovations, we don't discuss it in public till we launch them.
Right, sir, but just wanted to understand if you can, give some time frame to get the first mover advantage in this market, because it's a good market, it's a big market in itself.
I wouldn't like to discuss specificities of any particular innovation, save and except tell you that we have a very robust pipeline. And as HUL, we look at from both lenses. We look at the Unilever stable to bring in the right kind of innovation at the right time. And then we also look at homegrown innovation, which are relevant for the Indian consumers.
Thank you,
Thank you,
Sanjeev.
sir.
Sita, would you like to ask the next question?
Yes. Hello, sir. Thank you for giving me the opportunity. So last time when we spoke, you had said that your digital business contributes 15% of sales. So going forward, what is your strategy in terms of expanding your online sales? So if you can just throw some light on that.
Yeah, that is one area we are very, very consciously working on driving extremely hard across the channel that we have. Today, we have more than 15% of our business, as you called out, which is where we capture our sales digitally. That gives us a very good capability then to do demand generation in a very disruptive way. Now, this could be EB2C, could be our direct-to-consumer websites through which we sell. Our Shikhar platform, we have further expanded our footprint. We have now more than 700,000 outlets where we have Shikhar rolled out. We are seeing continuously increasing traction where the average order value through Shikhar is going up. The repeat orders are going up through Shikhar. So it's very successfully done across many towns and many cities across the length and breadth of the country. So strategy will remain to completely ensure that we keep digitizing. And wherever consumers go to do their shopping, Kirana stores, general trade is today the largest channel. In our view, for next decades to come, it will remain the largest channel. But there are equal disruptions happening on other digital channels, be it EB2C, EB2B, direct to consumer. We have our channel play, which is very comprehensive across all of them. Even the portfolio that we sell across the channel is very well differentiated to what consumers seek when they go to different channel to shop with different categories. So that portfolio differentiation across channel becomes an extremely important part of our digital strategy on sales.
So, do you have a target to achieve in terms of your online sales? Like, do you want to grow it from 15% to how much? Do you have a number? Do you have a figure for that?
Yeah, let me take this, Ritesh, let me take this answer. Yeah, there's no going back from e-commerce. Let us accept that.
Right.
And e-commerce, for the sheer convenience, whether it is to a retail store owner or to a consumer and shopper, and the kind of assortment that you are able to buy, this is something which is going to certainly keep growing. But at the same time, we have to understand that the dominant channel in the country is general trade and will remain general trade for years to come. But the difference is going to be that the general trade is also adopting technology in a big way. So when we talk about Shikhar app, that is something which is being adopted by general trade in a very big way. So this is not about what target. I think the only thing I can say is we will remain ahead of the evolution that is happening in the different channels in the country.
Right, sir. Thank you so much.
Thank you. Any final question? Anyone? Okay, then. Thank you very much for joining us today. Stay safe, stay well. Thank you.
Thank you.
Everyone.
Thank you.